Hey everybody, it's Tyson Strachan here with the Hockey Wealth Group on Monday, March the 4th of 2024. A great first week of reviews last week. Very nice catching up with a lot of you if you did have your meeting. Then had a really nice weekend here. Weather was awesome, and it was just nice after a busy week of meetings and reviews to be able to hang out with the little man. A little note for those of you alumni that have are now living back in Canada. Gary Meehan, who obviously had a long NHL career, then was Buffalo Sabres general manager, etc. He has a law firm who's now working with the NHL Alumni Association. I got emails from both the PHPA and the NHLPA Alumni Association talking about this, but they're working with guys now living in Canada to review whether they qualify for their social security benefits that they would have accrued while playing in the States. So if you're unsure where you sit on that, that's worth looking into. Obviously, we'd be happy to connect you to that and send the form over for you to review. Tax forms, custodians, obviously, we've talked about this, have till the end of February to get those out. Unfortunately, TD took every extra minute that the leap year had for them and didn't generate some of those 1099s until literally February 29th. So everybody now should have all their 1099s. Just a note on that, it's worth, thinking about filing your return maybe middle of March, because we've seen this with clients where they're trying to get things done so quickly, but they might end up missing a 1099, or a 1099 might need, an amended 1099 comes along. You don't want to need to go back and file an amended return. All these CPAs are very, very busy right now anyways, working towards the corporate deadline, which is obviously March 15th. Last week, markets mostly higher again, based off of great earnings, really, and that somewhat surprisingly have been really nice, nice and encouraging. So there was a report out saying that 90% of earnings reports have come in so far, and the average growth on those is 7.5%. So again, that's somewhat surprising, I guess, as a lot of people thought just where rates were, cost of capital, etc. Inflation, just everything around that it was going to be a really tough time for earnings, but so far we're seeing really, really pleasing results on that, and the market's showing that. And then again, people now sometimes are talking about worrying about valuations getting stretched. Well, valuations don't get stretched if those earnings continue to come up, correct? Right? Because it's just price over earnings. So anyways, as we go forward, obviously things can change at any point. It just shows how hard it is to predict markets. Like I said, if you went back to the beginning of the year, a lot of people were saying, "Oh, it's going to be really, really, really hard." And then we've seen great markets. 2023, same thing going into the year. A lot of people worried, and then a great market year. So, trying to time markets just almost impossible. The nice part now is that if we do start to see some slowing, some issues there, that Fed has that card in their back pocket where they can start to cut rates. And obviously, I think pretty much across the board, everybody's looking forward to when we start seeing those rates come down. And then this week, we see lots of employment data coming out. So we'll see the initial claims data and obviously the February snapshot. So hope everybody has a great week. We're into week 2 of our reviews, and we look forward to catching up with a lot of you. Hope you have a great week.